Hello guys, what's up? I hope y'all are doing great. Welcome back to a brand new video. I hope you guys had a great weekend and I hope you are ready for this next week to start. I wish you all a very profitable week. So guys, before we jump into the video, I will please ask you to subscribe to my channel if you like my content because I will keep them coming as consistent as possible. Also feel free to like and share the video. I will really much appreciate it. If you have any questions, make sure to drop them in the comment section. I will read through all the questions and I will make sure to answer them all. And yeah, guys, let me just jump straight into the video. Today, I thought of bringing you a market structure related video because market structure is one of the most important pillars in Forex trading because it tells you where the market is at, if it's in a uptrend or if it's in a downtrend, if it's consolidating, and these things are very, very important when trading because before applying a strategy, very important rule is to actually see where the market is heading. Is it in an uptrend? Is it in a downtrend? And to be honest with you, the ideal way to do it is to view market structure on the higher time frames like the H4, the daily. These are the my favorite two time frames to watch market structure to get an idea where the market is currently at, if it's in a downtrend or uptrend. Okay, so first of all, guys, let me show you what a upwards market structure means. When market is in a uptrend, the price usually tends to do this. Okay, so let me get up my path. Where's my path? Here. Okay, so when the market is an uptrend, it will move in a series of higher highs, higher lows, higher highs, higher lows, and so on. Okay, so this is how market looks in a uptrend. So we can note the higher highs and higher lows for you guys to have them more clear. So this right here is a higher high. When you first start doing it, it would be a good idea to actually mark them as well, to mark the higher highs and higher lows, because like this you'll get the hang of it even faster. Okay, here we have a higher low and then we have a higher high up there again. Let me mark this one. This is a higher high. We have another higher low right here. Let me clone this and put it right here. Oh, boom. We have another higher high up here. Let me clone it and drag it up here. And then we have another higher low all the way up there. Okay, bear with me. Okay, and then after this higher high got broken, the market then created a new higher high. Okay, so a new higher high is created when the previous higher high was broken. Okay, so when this higher high was broken right here, that's when the market created a new higher high, as you can see. Okay, it's pretty simple. It's not rocket science. Okay, so after that, okay, this is the bullish example. So for the downtrend example, it's the exactly same thing but the opposite way. So lower low, lower high, lower low, lower high, and lower low. Okay, so when the market is in a downtrend, it moves by creating a series of lower lows and lower highs. Okay, let me quickly draw them as well. Where's my text at? I forgot where my text is. Wait, accidentally. Okay, so we have a lower low here, LL right here. Then we have a lower high up here. Then we have another lower low down here. Let me clone it. 1 second. Let me actually move this one. It's easier. lower high, let me clone it, boom, this one right here, and then we have another lower low right here. Okay, so it's the exact same thing. When a previous lower low gets broken, the previous lowest point gets broken, that's when the market creates a new lower low. Okay, so this is how it looks when we are in a downtrend, and this is how it looks when we are in a uptrend. Okay, so now how do we see a reversal? Okay, so let's say market's been in an uptrend for the previous weeks maybe, and then it decided, okay, we now will have a break of structure and market will suddenly start to go bearish. Okay, so how can you spot this? Okay, so market it's moving upwards. Okay, so we have a higher low right here. Let me just note the most recent ones because there's no point in me going over them again. So we have a higher low right here, and then we have a higher high right here. Okay, so in order for the market to go bearish and go in a downtrend, the market will go bearish once this higher low right here will get broken. Okay, when this higher low right here will get broken. So once I see this higher low get broken on the H4, because that's where I usually view market structure, when this gets broken, then I'm okay. This might be a reversal, but that's not confirmed because market might break it, grab the liquidity sitting under here, and then move and create new higher highs. Okay, so a confirmation for that downtrend to be confirmed is for this previous higher low level to get broken and retested, or sometimes it might retrace even further. Okay, so you can use the fib right here. You can make use of the fib, and sometimes what price does, price might get up to this area, to this 61.8, so it might break this higher low, then it might retest it and go down. That might be a example. Or it could break this higher low and then go up to the 61.8, grab the liquidity, and then boom, go straight to the downside and start creating series of lower lows and lower highs, confirming that now we are in a downtrend. Okay, so it's pretty simple. It's pretty simple, but don't expect every single time when you see the previous higher low get broken, okay, now it for sure has to retest it and go down. You'll be happy to place your sell limit here, because most of the times market doesn't play like this. Okay, most of the times market either does this, come here, grabs the liquidity, and then go even higher. It may come to the 61.8 and then start to shoot lower. So you have to wait to see what the market what the market does, and after that you will be able to react. Okay, you will be able to react. So of course, after market broke this higher low, it then created a lower low here because the higher low was broken. So we have a lower low right here, and then it created a lower high right here, and then another lower low here, lower high, and it started to be in a downtrend. Okay, so that's how you can spot a reversal. But as I said, you got to keep in mind that it might come either to the previous higher low, retest it, and then go down, or it might come to the 61.8, 78.6, and go down. Okay, so when it comes here at these levels, you will have to wait for a bearish confirmation, like a bearish candlestick pattern or a bearish divergence. Okay, that could help tell you if the market will start rejecting off of these areas and shoot down, or if not, then it might just be a grab of liquidity and then a bigger move to the upside. Okay, so you got to keep in mind these things as they're very, very important. The same goes for the lower low example. So once this lower high gets broken, you will wait for either this zone to get retested to enter a buy, or you'll wait for a fib uh, for a retracement in one of your fib levels. Let's say it broke here, and then it will come down to the 61.8 or 50 area, and then you will wait for a bullish confirmation to enter a buy and switch the trends. It's the exact same thing. It's not really hard, okay? It's not hard at all to actually track the market structure, but as I said, it is very important to you for you to know where you are at. Because if you see that, let's say on the H4, you are in a uptrend, creating higher lows and higher highs. This is basically your range on the H4. Then going on a lower time frame, you will have in your in the back of your mind that, okay, we are in an uptrend, so it would be more clever if I look more for buy trades instead of sell trades, because like that you will be able to trade with the trend and filter out some bad trades. Or of course, if you want to enter sales as well, just be careful to not aim for the fences and go like for a 200 300 pip take profit. Just aim for quick little day trades, okay, or quick little scalps if you want to trade against the trend, okay. But then of course, if you spot a trend reversal like I said right here, of course then you can enter a sell here on a confirmation or up here, okay, when the trend changes. So now let me show you a live example on the H4. Let's scroll up, okay. Boom. So we have an example right here. So as you guys can see, market was in an uptrend, creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high. Okay, so this was the previous range. This was our previous range. We can mark it like this. This was our higher low. And then we can mark our higher high as well as this level right here. So now we knew that we're bullish in this range. And for us to be like, okay, now we are starting to change the trends, we have to wait this higher low right here to get broken. Okay, so we got to break right here. We got to break right here from this zone. Okay, so this was the area that caused that drop. So we can now pull the fib onto this wick. You can draw your level at the 61.8 area as we discussed right here, and then you will wait for either a confirmation on this zone right here at the retest. Do we had any confirmation? Not really, because we see this massive bullish candle, then a bearish candle that hasn't engulfed it, then another bullish candle, and another bearish candle that hasn't engulfed it. So we don't really see a bearish pressure forming, but then we can see that market pushed to that 61.8 area. We saw a massive bearish engulfing right here. You see, it's very self-explanatory. It's not hard to spot. We saw a massive bearish engulfing, and after this candle would have closed, you could have entered a short position right here. Place your stop loss at the 78.6, and then I don't know, you could have aimed for this level right here. It depends to you, okay? It depends to you on how much you want to risk and how much you want to gain. Of course, you could have aimed even lower and made like a 1 to 6, 1 to 7 based off this H4 time frame, okay? So you could have literally entered on the H4. And now, as you guys can see, after we entered here, price started to create lower lows, lower highs, then another lower low here, another lower high here, another lower low here, another lower high here, another lower low here. Then the previous lower high was kind of tested but not broken, and then we created a new lower low. So price was clearly in a downtrend after the previous higher low, after the previous bullish structure was broken and confirmed, okay, because it was actually also confirmed, because price then broke, retest, and then flushed even further down, confirming that now we are in a downtrend, okay. So this is pretty much how you guys can trade using market structure. If you like the video, make sure to drop me a like. I will really much appreciate it. If you have any video ideas, make sure to drop them in the comment section. And guys, if you want to learn more about my strategies, about the way I trade, if you want to join my signal group and all that good stuff, just make sure to DM me on Telegram. I will leave you my Telegram link down in my video description. And yeah, this was pretty much it for today's video. I will highly recommend, after you watch the whole video, to just go on your charts and start backtesting so you can train your eye to see the market structure. Because guys, I can't stress this enough, the market structure is very, very important, because you cannot go blindly on the M15, on the M30, be like, okay, let me get some some day trades in, without knowing what the trend is on the higher time frames. Okay, so be sure before you start to search for trade setups to actually check the trend on the higher time frames, like the H4, the daily. These are the two time frames I would suggest. Okay, so just make sure to do that and use the market structure technique that you've learned today. And yeah, guys, this was pretty much it. I hope y'all enjoyed the video, and I will see you in the next one. Goodbye.